to share with you some exciting new developments we've got regarding some reporting. So we're now able to give you some fantastic reports that are very easy to follow, very graphically good to look at, that give you the financial insight that you really need to run your business well. The first one I want to show you, this is a made-up company, but it's a month-on-month report, so you can see variations in month-on-month performance. So past the table of contents, we have the executive summary. So there's a little report there on revenue. So you can see their revenue for the month of July was X, an increase of 41.7% from June. You can see your top customers, top 5 customers, which is always very useful. Expenditure, so expenses for the month of July was such and such, which was an increase of 426%. So that's good to keep an eye on. And you can also now see your top expenses. So what is costing you the most money in the business? Then we're going to look at the net profit. So your net profit after tax for the month of July was a decrease against June's figure. So some very, very useful insights off the bat there. Income versus expenditure. So you can obviously want the green to be more than the red. You can see underneath there we've got some insights. So the income for the period, August to July. Expenses for the period. So this is a 12-month flow, so you can see exactly what's going on there. Again, very, very easy and quick to see where you are on a month-on-month basis. Net margin, always good to see in a graph, so you can see, is it in the grey or is it in the red? Top customers by sales as a percentage, really useful. I mean, if you're like most people, you'll find that the customers that give you the most grief are actually quite unprofitable, or certainly down the lower end of this particular scale, and the great customers should be really at the top. So it's a good idea to see who is giving you that sort of revenue that you want, and who potentially is burning your time and your profit. Over here we've got some client balances, so you can see who owes you money, how old it is, very quickly at a glance. So fantastic for sort of monthly reports. And you can see the top debtor here as of July is such and such with an outstanding balance, and that accounts for 9.25% of the top 45 debtors. Again, when it's put into that sort of formula, you kind of realize that maybe you shouldn't put credit control off, because that money should be in your bank. Client retention, very important. Obviously depends on your industry, but it costs a lot of money to attract a client, and you need to look after them, frankly, because if you don't, they're very, very easy to lose. So having an indication of how your month-on-month retention is, very handy. Cash in, cash out. So this is the flow of cash versus it coming in versus the flow of cash out. So different sort of set of metrics to the P&L, but always good to know. So you can see how the flow is. You can also kind of see where cash may have been tight in the past, and now you know the reasons why. So cash received, cash paid, and net cash coming in. Cash flow is king. So then we have the expenditure account. So where is the most money going in terms of expenditure? So you can see the insight will say the top expense for the month of July is such and such, and that represents 29.4% of the total expenditure. Very useful just to see, to keep an eye, particularly if you've got a budget, you want to see if things are going in the right direction. Supplier balances, what you owe, and how long overdue they are, may or may not be. Obviously it's great practice to make sure that you look after your suppliers, because they are some of your biggest advocates out there in the world. So a similar sort of thing here as well. You can see that a representation in terms of percentage can be very graphically accurate. So P&L, month-on-month variation. You can see, again, very straightforward to see. If it's green and it's pointing upwards, it's gone up. If it's red, pointing downwards, it's gone down. We can also do this with budget variations as well. But very clear, all the team can see this. You can see it for yourself. Focusing on the reds should hopefully make things go in the right sort of direction. Next we have the balance sheet, assets, liabilities, all that kind of thing. So you don't really have to wait until the end of the year until the accountants do their wizardry to see this. You can see this as it is developing month on month, and if you've got a particular target in mind, then you can keep an eye on that shareholders funds. We have some profit and loss ratios if you want to measure that side of things, very much towards the back end of the report. So a very accurate report there. And this also, what is worth mentioning, that this is only really as good as the information that's provided. So as long as the information within Xero or QuickBooks or Sage is up to date, i.e. the bookkeeping and everything else, then the accuracy of this will be extremely high, and you can see it fairly quickly. So just moving on to the next report, if I can show you that. we have the forecast. So this is the forecast of where this business is likely to go. We have a cash balance forecast, so what's likely to come into the account. This is again based on historical data and previous up to this moment in time's information. So here we can see that the forecast calculates the median growth rate for cash in, cash out by comparing the year versus year change over the past 24 months. So it's got a good level of data behind it. It's not just kind of stick a finger in the air and see what happens. We've also got a cash flow forecast as well, so you potentially can see if there's going to be any kind of cash gaps that you need to be able to fill in some way, shape or form, i.e. you may have bought something that you're not going to see a return on for a couple of months. At least if you know that cash gap is coming, you can bridge for it. Income versus expense is forecast as well, again always historical. You can kind of see on this particular example in September, we have traditionally had a situation with this particular client where the expenses have outstripped the income, and now obviously now we're in well, I'm recording this, it's the 11th I think of August, so we have got time now to actually try and make them changes if we need to. So it does give you a little bit of a green light. We can go as further forward into the future as is required, maybe up to 12 months on these reports. Profit and loss again can be very useful to see. Sales, you can see based on historical data where that's going to be, cost of sales, expenditure, and ultimately in the total income. And you can see September for this particular business is scheduled to be a £8,000 loss based upon historical data. So again, we can make the necessary corrections. You're basically then working ahead of time instead of playing catch up and saying, oh, where's all my money gone? The final one I wanted to share with you is the business valuation report. Now, this is a very cool report because the reality is that you want to maximize the value of your business, and there's a couple of ways of doing that. Obviously, from a financial transaction perspective is key. Also, a good thing to remember is if the business is heavily dependent on you as an individual or as an owner manager, then you are the business, and that can potentially reduce the value of the company, just simply because if you left, then there's a big hole there that nobody can really fill. And that's why we've created the business club to help people get away from that front line. But that aside, the valuation, it takes place, it's based on the SIC code of your business, and it uses 450 different base points to calculate the multiples on 4 different columns, and these can be different depending upon your industry. So that's why it gives 4 different ones. So we've got the revenue multiple, and you can see in this particular industry, the revenue multiple is 1.2. There's a profit multiple example here as well, and again in this industry it's 4. There is an EBITDA multiple of 6, and there is a net asset value. So different ways of seeing the value of any business, and look, at the end of the day you want to try and make it as valuable as it can do. Maybe you want to sell it, maybe you just want to sit back, get somebody else to run it for you, you stay 100% shareholder and just let the money come in. But this isn't something you'd run every month, but you'd certainly do it maybe once every year, so you can see are your efforts going in the right sort of direction. So we're really happy now that we've got this level of in-depth information that we can supply to you on a month-by-month basis, a quarter-by-quarter basis, to help you guide, make the right decisions at the right sort of time. They're quite easy to read, they're well presented, so hopefully everybody can understand it. And if everybody can understand the numbers on the business from top to bottom, then you're going to go in the right direction. So thank you for sticking with this. I know it's been a little bit long-winded, but we're super proud to be able to offer these reports to you, and hopefully you'll take them on and we can watch your business grow.